General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
Should be ready to do week 5. Calendar. What in the world? Okay, let's do this. Okay, some tentative stuff. Okay, we got some EU stuff. It's good for me. I think you're supposed to watch EU anyway, just because the EU is 70% of the dollar. Or 50%. I'll look at the number again. Perfect. So Euro has all the news. All right, so Wednesday we have Fed fund rate. They cutting rates. We're supposed to have NFP. We got GDP tentative, employment cost tentative. Everything else is tentative. Okay. For you, we have refinancing rate. Oh, they call it Fed on Thursday. So Wednesday, Thursday. Wednesday, Thursday is big news for dollar. Let me see if how much of the US dollar is made up by the euro. 50 mil. Yep. So put this here for the notes. Hold on, wait. Boom. So the euro's 57% of the dollar. The government shut down. I'm about tired of it now. It seems like we're like, nah, can't even. I be liking to know that stuff too. We already know they cutting rates. I'm not surprised. I think it's gonna be significant. I feel rate cut is priced in. Oddly enough, we could drop all day the day before. I don't remember. So no bias going into this week. But still showing up every day because we seen deliveries. We see price deliver textbook even when the news cycle is off, because sometimes we see that's a big sometimes we see price deliver textbooks news cycles off. That's true. It's just true. Then I already did that. I got a Earnest Whisper thing. Sophie. Yeah, I don't care about none of this stuff. Sophie's interesting. PayPal's interesting. UPS is a good company to own. Meta, Microsoft, Google. Wednesday, Thursday. So Wednesday is Fed fund rate and Meta, Microsoft, Google. I can't do the alphabet. When they gonna invent the metaverse? Cause y'all still Facebook, ain't no metaverse. Thursday is Amazon and Apple. What am I in? Okay, I'm in Amazon. No, I got out of Microsoft. And another one. No, Netflix. That was just okay. So Wednesday's Fed fund rate. And Thursday is. This is setting up with all the major news. It's Wednesday midweek reversal. earnings and Fed fund rate. I think the sentiment flipped bearish and we went all-time high. Yeah. Last week we flipped bearish and we went all-time high. We're a little bit more bullish this week. Bearish on sentiment. And price went to all-time high. So this week we still bearish on sentiment, but I think people could just be repositioning with news and government spending. Because people got to put their money somewhere. The government putting their money into AI. 9 weeks of days. Let's go to weeks first. Where's that line at? 1, 2, 3, 4, 5, 6, 7, 8, 9. This is where we at. We can delete that. Yep, remove that. We can delete that as well. This old all-time high can go. Well, no, we'll keep it. Should I move it? Previous month's high we'll keep. This is still the last. Nah, this is it now. Unlock. That's our last stop line on the daily. It's gappy. There's gaps everywhere. And this one has been used so many times. I mean, that's pretty much it. This is the ice water target. We're going to get that. I don't know if we're going to get this. We thought we was going to get this. This is the Trump said, nah. We not getting this. Because I know everybody wants it. We way up here now. So now we got this. Like obvious target. We'll see if we get it. Way up here is past news. If we start breaking this, I start marking that. This is the 9 weeks of days done. Price at all-time high. if we have to wait for sales right now, I'm thinking zero. What's that? Minus zero. Fib extension for this week target. That 25 462.78. Anchor point interaction. The stop hunt. That's really what it is. Let me label this to Trump tweets. Trump tweet low. It's the Trump tweet low. Put this at the bottom. Trump tweet low. Has engineered liquidity above it and everything. Price is just so strong. We haven't returned. Yeah, I don't know. Restored the price alignment. Lots of things. Government shutdown. Israel war and Ukraine war. All these things are barriers to global trade. There's war, Ukraine war, these global trade. Kinda keeping things from rolling, but businesses are doing a good job of stocking up before tariffs. No, we engaging. But slow. We in the field every day. Look at how that wig did what it's supposed to do. The weekly chart be looking too clean. Yeah, I don't really need nothing down here. I just like 20-day low. After here, yeah, the rest of this stuff gets interesting. But for right now, just the 20-day low. That's it. I ain't push nothing. Mm. Okay, let's see here. Overall bullish, but buy under the lows. Thank you for interaction. Aha, it is confirmed and retested and valid for the time being. Restore the price alignment. Government spending money. Metals go up. Engage. Let's look at euro. Just the week. 1, 2, 3, 4, 5, 6, 7, 8, 9. Bam. Okay, so this has been swept. The market, the algorithm doesn't have to reference this. This is what we're working with. This is still a low. Mm-hmm. Okay. Kind of choppy, but PBL to PBH is still a plan. Anchor point interaction. So far, the high has been holding. Valid. Store the price alignment. Dixie has been pumping. Retracing, but overall, it's still bearish. Pumping. We engage in here too. Skill focus. Gotta be nimble. Bread and butter. But must trade that Osaka. Forex or options. No more. Guessing it's not going to be favorable because of not going before. Hold on, wait. Kind of lost the train of thought. Be nimble, bread and butter, but must trade Osaka on Forex. I guess it's not going to be favorable. Not going to be favorable because of news cycle. Journaling intent. daily markups and chart work episodes. Case study hunt plan. Nothing in particular right now. Oh, y'all wanted to look at the yield maxes. Definitely bread and butter. No, it's not counting trend. We'll go day trade. I'll risk this too. Nah. But we're not going counter trend. Yeah. Fed fund rate is this week. Going to be nimble. Until after the market absorbs that fake out. If we have a fake out Wednesday, midweek. Reversal because of news. All right, that's that on that. Make sure I got everything. Yep, week 5. Well, the start of the week is going to be the 26th. All right, we ready. All right, y'all keep it cool. Peace.